Okay, what is up, traders? Another one from the Dark Side family here. Just like I spoke about on Telegram, I told you I'd break this one down for you guys. And this is New Zealand Japanese yen from Monday, sometime between Sunday, Monday market open of this week, so the start of November. So for everybody who tells you, you can't trade market open, you can't trade Mondays. I once had my mentor years ago tell me that, oh, you have to wait for the market to settle down. So I don't mean, what does that really even mean? You have to wait for the market to settle down before you can trade. So I mean, it's just the stuff that gets passed around is absolutely ridiculous at this point. Like I say, do your own due diligence, look for yourself, see what works for you, because that's just not the key. So going into NJ here, it's a simple play. Like I said, it ran 1 to 25. All I'm doing is back testing and looking for examples here, and I came across this in under 5 minutes. So again, NJ from earlier this week, simple play on structure here. Let's break it down real quick and why everybody should have been able to catch this move. 25% return, you would have passed your FTMO twice. You could have put 25% into your capital. So just tons of opportunities. So let's go down real quick and just keep it simple. We'll back up the chart. And this is, again, guys, what I told you about backtesting the other day. This is the whole point of doing all this stuff, to get familiar with it, to be able to see these scenarios, and then just be able to attack them. The same things happen over and over. Learn to take advantage of them. So we'll just start right back here. And again, we're just going to go over some basic structure right now, which I'm sure everybody must be familiar with at this time. Higher highs, higher lows. Everybody's preaching the same thing. It's what it is, guys. It's simple. So here we go. We've got ascending price action here. All right. Go ahead and mark these out here. We've got our break of structure. All right. Just for those who don't know, we'll go ahead and white that out. We've got our break of structure as well. All right. And again, just to make sure all of our followers are clear on what's going on here, we've got ascending structure, which is a high, higher low, a higher high, and a break of structure. So a lot of times when these things happen, our Fibonacci traders are now looking to sell the market. All right, they're going to look to sell here. And this might be repetitive, guys, because it's the same thing that we always talk about. But our Fibonacci traders will look to enter the market here. Let me add the levels for you guys. As you can see, price will always acknowledge a fib level here. It's the 50. You've got support and resistance, guys, that will also enter the market like here. We'll just go ahead and mark that out here. We'll see why we call that support and resistance. It's very simple, because it acts as resistance and then it acts as support, where price hits it, rejects it, breaks through, bounces off of it as support, breaks through it again, acts as resistance, comes back down, acts as resistance again. So this is what they would call support and resistance. So that's support and resistance. So sellers, again, will enter the market here. You've got bearish engulfing candles. Like always, same thing, guys. But, our imbalance guys and our order block traders will be looking here. And there's one here on the 1 hour. Again, the imbalance would be the area where you just see the body of the candle and there's no other candles crossing it here. Again, just Google that if you want the proper definitions and understanding of imbalances. Just look it up, guys. It's free information. But on this particular one, there was a very clean, what they would call a clean 4-hour imbalance or order block. Now, again, the order block would be, in this scenario, the last buy before the sell-off. So that would be this particular candle right here, this green one. Typically, order block traders like to trade 50% of the body of this candle. So we'll just draw, that's about 50% of the body there. Okay. And you have imbalance traders that are focusing more on the imbalance of this red candle here. They're focusing more on the area from here. Just highlight this to make it clear for everyone. They're focusing on the imbalance, which is the area that has not been filled. And in this particular scenario, it will be from here to here. And as you can see, there's no candle or wick or anything that crosses into this area. It's just an imbalance. It's an imbalance in the market. You see how these are all covered up? There was a body here, but the wick comes up and covers it. All of this is healthy price action. So this imbalance is something that they like to see get filled before entering the market short. So again, there's imbalances everywhere in the market. That's not the issue, is finding an imbalance, because they're everywhere. The issue is knowing which imbalance to use, and this one happened to work. There's a lot more reasons than why it worked, but you'll figure that out in time. So again, we'll see price action kind of pull up into this area, It rejects again. Now remember, our Fibonacci traders would have been short here at that 50 fib level, which is great. They would have got a decent sell-off. But another important thing to notice here is the bearish order flow that's coming in. We've got a high, our low, our lower high, and our lower low. So what that does is that creates sell opportunities for structural traders as they're seeing price come down. So again, we'll just highlight those points. Let's do them in red so everybody can see them. Sorry. There we go. So our bearish guys, our bearish structural traders are watching the market and seeing it like so. That makes sense, guys? You got the high, low, lower high, lower low. And again, the reason they're seeing this is because of the break of structure right here. Okay, let's do that in red so it all makes sense. They've got their break of structure, their low, lower high. They've got their break of structure, lower low. So they would anticipate another move into here and then price to continue down into this direction because there's bearish order flow. That's what makes sense. The bears are taking over the market. So our structural traders probably would have got screwed on this one in particular as we let price start to go in. Now you can see even again how it acknowledges it. And again, this is not by chance. If we back up the screen just a bit to about right here, you can see where it would have invited those structural traders and made them think they were on the correct side of the market because we can see the acknowledgement of price right here where it gets very close, it taps in. Now, if you're a candlestick trader, you're going to notice these are maybe they call them dojis or something or whatever, changing in the delivery of price from bullish to bearish. That's what's the appearance is right here for most traders. So they'll enter the market at this time as well. So as you can see, it was just ended up being another trap. But what I'm trying to highlight here is just how many different things are taking place in what seems like something so simple. What one guy is looking at as a sell, the other guy is looking at as a buy. And that's why it's trading, because it's the act of giving something and getting something. So if somebody is losing in this position, somebody is winning in this position. And that's why I even say again, as far as this trade happened on a market open, and they say don't trade market open. If you can lose on market open, that means you can also win on market open. I mean, just think about it. It's simple. It's logic. If somebody's winning, somebody must be losing. That's what trading is. Again, let's just go back to our original idea. That's just one of the many traps that takes place in the market. But again, we were just waiting on this simple structural order flow play here, and as we can see, price slowly gets close to it. Again, it would have taken you out if you would have entered here. Maybe you were anticipating the move into this 4-hour zone above, but price never reached it for you. So you think you may have missed the move. So maybe you got this bearish engulfing here. Maybe you got in somewhere around here. So you would have put your stop above this high. You'd say, all right, well, I think I missed the move, but let me try to get in. So that looks like another Fibonacci level here. Let's just take a quick look at that real quick. I'm sure it is. You would have said, I missed the move. Let me throw my fib up here. Let me get in. Yeah, you can see again, it's a Fibonacci level again, guys. At just about the 61.8. So I'd imagine maybe if you saw this happen and see, maybe you saw this. Maybe you saw this happen, this rejection. You've got two big bearish candles. I mean, that looks like a solid sell opportunity to a lot of people. So you probably would have waited for the pullback, as you like to call it, right into there. And hopefully you would have got in right there. That would have been clean. And I'm sure, again, that's another fib level. So let's just check that one too. That looks like a 78.6 maybe. Let's see. Let's measure that out. Yeah, 78.6 to the pip. So again, guys, and I'm not, you can see I just look at it and I can see that, and that's from chart time and experience. I mean, the more you do this, the easier you'll see it too. So again, sellers would have entered the market here. That could have been a nice sell opportunity for them. It would have been a stop above the high right here. So 13 pips, that's not bad. There's nothing wrong with the 13 pip stop loss, no matter if everybody thinks it's not the right way to trade or whatnot. Like, you don't need a 5 pip stop loss. You can get away with 13 pips and still make a significant return. Let's just say you got in around here. You would have been, again, anticipating further downside because, in your opinion, what's taking place is your break of structure and you've got your push to the upside and you're anticipating another leg to the downside. So it would basically be like this. It would be here to here to here. So you'd be looking to sell off. Not the worst idea. Again, the whole reason being is because you were waiting for this 4-hour area, which never got hit. Just to clean it up so we can stay focused on it, what we're talking about, this 4-hour order block imbalance. So it would have looked like a nice move from here. Not bad at all. So that's just another opportunity in this here. But eventually you'd be hunted out. Nice push there. And as we can see, price just slowly starts to creep up. Almost gives you guys another entry here if you're looking for imbalances. If you're looking to trade imbalances, you could have went right here. There's another imbalance in the market, guys, right there. As you can see, like we spoke about here, what the imbalance is. Remember this imbalance here? Same thing. You can see it right here. There's an imbalance in the market where price has not covered this candle at all, leaving just this area open. You see price fills it, rejects from it. And again, what's it do, guys? It invites more sellers into the market. So, depending on how patient you are, you'd either still be waiting for your area up here to get hit, or you probably would have tried to get in on one of these thinking you've missed the move. But, like we always say, patience pays, and it costs you absolutely nothing. So as we can see, things might have went well for a while, but eventually its price taps right up into the area where we were anticipating to begin with. Now here is where it really gets nice. As you can see, it tapped this 4-hour area to the pip, okay? And again, you can call this an imbalance, you can call it an order block, you can call it a zone, you can call it whatever you want, but it filled this gap here on the 4-hour. Let me see here, right? Let me see. Yeah, right, basically right to the pip. I mean, right, that doesn't get any cleaner than that, guys. And the best part about this is what actually takes place when that happens. And it's the fact that you don't need any special skill to be able to identify this move. If you would have just been patient enough to wait for the 4-hour imbalance, order block, zone, whatever you want to call it, if you would have been patient enough to watch for this, you could have easily caught this move just understanding structure. Because this simple play right here, the one that we've told you guys about many times before, the simple play where you just have ascending structure, break of structure, and then a retest or a fill of the imbalance, whatever you want to call it, is exactly what happens right in here on the lower time frame. And we'll point that out to you as well, just to show you guys the power of just understanding structure alone. This isn't even putting in close to the other things we use as confluences, but I just want you to know that you can still even get by with this with the right amount of patience. Okay, so if you look at what price does here, let's back it up just so we can see the exact time to enter. If you look at what price does here, guys, it's super clean. You've got what? Ascending order flow, okay? You've got the low, the high, the higher low, the higher high. Okay, so you're waiting for a break of structure. Price taps into your zone. Okay, let's just move this out of the way so we can see. Now price taps into the zone here. Okay, that's not by chance. That's a precision touch there. Okay, price comes in and what does it do? It breaks structure. Okay, break structure right here. And again, we've seen this so many times, guys. I keep pointing it out to you. There's no secrets to getting in tight. You've just got to wait for the break of structure, which would be right here, and then the price to fill into this gap and continue to the downside. Same thing we've pointed out in all of our other examples. It's the same thing that we're looking at right here as we're looking at on the high time frame right here. It's the same thing. It's literally the exact same thing. Ascending, order flow, break of structure, fill. That's what price just did there. So we're looking for that same thing here. What do we have? We've got ascending order flow. We've got ascending order flow, break of structure here. So what are we doing, guys? And I'm sure you all should be able to guess as you're following along with this one. You're waiting for the imbalance fill, the order block fill, the tap, the retest, whatever you want to call it. You could be waiting for, maybe you want to wait for your Fibonacci level. If you want, there you go. We'll throw a fib out there. Whatever you want to do, it doesn't matter. We'll look on the 5-minute real quick for something clean. Yep, 5 minutes showing here. We've got a 5-minute imbalance here, which we'll highlight to point out to everybody. Let's go ahead and get rid of this so we could be a lot more clear here. Okay. Again, why is that an imbalance? We know already. I've spoken to you guys about this a million times. You know what it is. Price will run up. Let's see if there was on the 1 minute. The 1 minute, you can see an even cleaner one in here. All right, let's just dim that back a little bit. You can see the 1 hour, or I'm sorry, the 1 minute imbalance here, that little green candle that had an imbalance in the price before it came down. And then if you're a fib trader, you also got your favorite levels. You've got your 50, you've got your 61.8. We can add the OTE, which ICT calls the optimal trade entry. That's the price right there if you guys want to add that onto your fibs, 0.705. So you've got all those areas there to anticipate. And again, you can sell from any one of them on the scenario. I mean, everything else is in your favor. So even if you did get in the 50 right there, right here, and you got in, price may have went against you for a little while. You might have got nervous, but if you had your stop above the high, you're good. You don't need to have a 2-pip stop loss on everything. I told you before, the brokers love that the most because you end up not even giving yourself a chance. And as we can see, what price ends up doing, it acknowledges most of those fib levels. It acknowledges the 50 here. It acknowledges the 61.8 here. It blasts right through the OTE level, the green right here. It blasts right through 78.6. So you probably would have been a little worried if you were a fib trader, but as long as your stop was done properly, you should be in a good position. So again, your sell would have been here, assuming you were using that 5-minute imbalance that we pointed out. Would give yourself, let's just for a cushion, we'll give you a 6-pip stop loss, 6.1, 6-pip stop loss would have been just fine. All right, go ahead and extend that out a bit. There we go. And then we'll let price just do what it does. And again, it's just a beautiful move to the downside. Go ahead and clear all this out here. And price just continues to run away like it stole something. Really nice move on NJ here, guys. So if you can look, and again, this happened on Monday. So, here I am. I'm New York time. It's Wednesday, 12:15 New York time, PM. And you would have still been collecting. It looks like the move kind of finished off. I think it was right around here that the move finished off. Let me see. Nope, it went deeper and deeper and deeper. And it gave you a pretty big retracement, which was fine. But, the fact of the matter is price ran to here with a 6-pip stop loss, giving you a 1. Let me see here. Yeah, about 1, right about there. I think it stopped. Yeah, so here about 1 to 22 if you didn't get in tight. You could have gotten a lot tighter if you'd like to. But again, we just used that 5-minute imbalance that was up there. Okay, but the fact to take away from this, guys, is just look at how easy you could have done this. Just look at it. It was a simple thing. It was ascending price action, break of structure, 4-hour fill of the imbalance, and price just melts it away. And when you look on the 4-hour, it's even cleaner. You can see the 4-hour imbalance here, order block, whatever you want to call it. If you were trading order blocks and you were looking for 50% of the body, this line right here, this one that's highlighted, you would have missed the trade. So regardless, you could just see how simple this one played out. And the return that I would have gave you is an incredible return. And this would just come from a basic understanding of structure. This isn't incorporating any of the other techniques that we use or anything that some other people use. This is just you understanding what higher highs and higher lows and a break of structure is, and then waiting for those same higher highs, higher lows to reach into your area, break structure, and then make descending order flow. So again, guys, this is just another simple example. I came across this one back testing. As I mentioned before, the market's kind of slow for me this week, even though I caught an absolute beauty on UJ, which was unbelievable. 0 drawdown, perfect trade. So I'm not really looking to get into too many things with all the news pending, but that entry was just too perfect, and it happened to tap into my zone right before the news hit, so the news just blasted it. And I'm pretty much done for the week there. Just watching and back testing. Same thing you guys should be doing, back testing. And you come across scenarios like this, you journal them, you mark them down, you find a way to get in them, and then you keep that, you build that up, and eventually you're going to start seeing these same things happen over and over, and you'll develop your own personal style and approach to the market. So I hope this brought some value to you guys. Just another one from the Dark Side team here, trying to help everybody out. And if you learned something from it, again, leave us a comment in the bottom. If you like this stuff, give us a like. This way I'll keep doing them. I mean, if nobody's interested, then we'll stop doing them. But if you guys like them, we'll keep them coming. And we'll talk to you soon. Thanks.